Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network.
Before we get into today's show, there are a few things we have to go over.
Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Nicola, welcome onto the Australian Finance Podcast today.
Kate, thanks so much for having me.
Now, it's great to have you on the show because you're an expert in property, rent, all of those things. And when we were on the road recently for our Rask Roadshow, we talked to listeners all across the country, and the question about rental affordability came up time and time again. So that's why we're bringing you on the show to give us a little bit of an insight into what on earth is going on with the rental market, because everyone talks about buying properties and being a homeowner, but people don't really talk about what it's like to be a renter. So really excited to have you on the show today.
I think it's such an interesting topic. You know, I've been in real estate analytics, property analytics for over a decade. That's what I've focused on: demographics, sales market and the rental market. And I cannot remember a period of time where we've seen such a heightened conversation around our rental market. You know, it really has dominated that, and interest rates. So rents and interest rates have been the dominator of conversation over 2023.
It's been interesting. And one of your recent reports that you put out with Domain said that Australia needs about 70,000 or something like that more rentals to make sure everyone has a place to live. It was something crazy like that.
Look, it is quite a shocking statistic. And what I find is if you can kind of really visually quantify something, it allows more people to actually understand, well, actually, this is how dire the situation is. So to have a balanced rental market, you need to have a vacancy rate that sits between 2 and 3%. That means it's balanced between landlords and tenants. At the moment, we've got a landlords market nationally that is across all of our capital cities and into the regional markets. Today, we have a vacancy rate sitting at about 0.8%. So it's very, very tight. And it is, you know, a landlord's market and competitive for tenants. So what we did is, well, how many rentals do we actually need to get that vacancy rate into that equilibrium, into that sweet spot between 2 and 3%? So we need today between 40 to 70,000 additional rentals across Australia. And to do that visualisation, that is every single dwelling in the Newcastle LGA added to Australia's rental market. And that is going to be no easy task.
So the 2 to 3% number, because I'm not super familiar with that, does that mean that there's enough empty rental properties available that renters have a little bit more power in the rental market so they can negotiate prices more? They don't have to stand with 30 people at an inspection for a rental property?
Yeah, so what you tend to find is when that vacancy rate is sitting between 2 and 3%, you tend to find that rents are pretty stable, and that's a good outcome, I think, for both landlords and for tenants. When you get vacancy rates sitting higher than 3%, that's when you get declines in asking rents. And then when you've got vacancy rates below 2%, it means that there is strong competition between tenants, and, you know, landlords definitely have the guiding light in terms of being able to hike asking rents. So that's the kind of balance that we see. And, you know, we really want that vacancy rate between 2 and 3% to get that overall balanced dynamic across Australia's rental market. And it has been a landlord's market for some time. And, you know, there are some cities that have much lower vacancy rates, which means it's much more competitive for tenants. So Adelaide and Perth currently have a vacancy rate of 0.3%. Remember, we want it between 2 and 3%. So when if you're new arriving into Australia, or perhaps you're moving from one city to the other and you're going to Perth or Adelaide, it's pretty much impossible to find an empty rental across these two cities, you know, at 0.3%. And these cities have actually had tight rental markets for a number of months now. So, you know, this is an ongoing situation where we haven't suddenly just turned our heads and, okay, look, there's a tight rental market. This has been building for years.
So how did we get to this point over the last few years where it's such a tough market for renters?
It's certainly been a combination of factors, and it's been really interesting to actually watch that unravel, because we obviously saw vacancy rates bounce during the pandemic when we had those border closures, particularly so in our bigger cities that welcome more overseas migrants than others. But it has been a combination of factors, a lack of housing supply, and particularly affordable housing supply. And when you've got very high property prices, when you've got a median house price in Sydney sitting at about 1.5 million, what that does is lock people into the rental market for longer. We've seen unprecedented headwinds within our construction industry, and that's slowed down the completion of new homes. So that's added to the shortfall of housing. That's another reason. Some of the other aspects, we haven't built enough social housing across Australia, and what that means, and it's a really important aspect of our community. We need to be providing social housing. So what that means is some of our more vulnerable Australians, those that are on those low incomes, are forced into the private rental market, which is what we're talking about here, when they really should be in social housing. Some of the other dynamics, and there is a bit of a long list here, is we've also seen a shrink in the average household size. Now, that happened during the pandemic, which means that there were fewer people per household, fewer people per dwelling. And what that means is instantly you need more homes across Australia to house the Australian population. Now, we've started to see that a little bit reverse, and I think particularly that is occurring in the rental market, because I think once you get affordability so stretched, what that does is it means that people have to reevaluate. Well, how do I cost cut? I cannot afford to live on my own. Perhaps I need to go into a house share in order to cost cut rent. And I think that's what we're seeing, particularly so in the rental market, is people reconsidering house sharing.
That's so interesting. And to get back towards that 2 to 3% vacancy rate, does change have to come from the government?
Absolutely. I think really, it also flows onto the sales market too. The underlying thing here is we have not built enough homes. We have not built enough homes, and this has been building up and up over a number of years. Supply is the key. And I think what's been quite interesting over 2023, supply has become the focus. We've seen the Housing Accord. We've got that North Star of 1.2 million homes to be built over the next 5 years, which means we need to see 240,000 homes being delivered every single year. But whether or not, and this is up for discussion, will we be able to achieve that? I'm actually really pleased that we've got governments focused on supply, because we're talking about the rental market here, but what we also need to consider is there are some people in the rental market that desperately want to own their own home. And affordability is just locking them in. They're facing higher and higher rents. Mortgage rates have also increased, so the cost of debt is much higher. And then coupled with that, you've got high property prices too. So, there's so many interlinks between the for sale and the for rental market. And I think, when we're having those big picture discussions, supply, I'm so pleased that it seems to be at the top of the agenda for governments. It's the first time that I've really heard government speak seriously about supply. And I think this is the issue. I think what's been really interesting is we've seen demand really ping back strongly as a result of overseas migration. We have seen record levels of overseas migrants coming back in. And, that's expected. That's that post-COVID migration boom into Australia. But what we've done is we've increased population growth at a time where the rental market was already really struggling. And that's due to a variety of different reasons. And the thing here is supply takes a long time to come to market. And what we need to ensure is if we are increasing population growth, we have enough homes to house people that new residents into Australia. And I think it's really important and pleasing to see that government is actually focused on supply.
So if someone listening to this right now is renting, their landlord has hiked up their rent this year, it's suddenly taking up a huge amount of their paycheck, can they expect any sort of more attractive rents available anytime soon?
Look, it is challenging, and I think the vacancy rate is low. And so when you've got a tight vacancy rate, it suggests that we are likely to continue to see rents rise. But I think there's another underlying dynamic that goes on, and that is stretched affordability. And tenants are feeling that. They've seen rapid increases in rents. And, on the flip side of that, and we didn't mention this earlier, you've got investors. Investors have faced such a blowout in the cost of holding debt also. And what that means is some investors have just had to tap out. They've had to sell off their investment properties because it just doesn't stack up for them. And you can understand that. And actually, investors are much quicker to flick off a property if the balance sheet doesn't add up and they can't financially hold on to that dwelling. Where for an owner-occupier, they will sell the shirt off their back in order to cover their mortgage repayments. It's very different. And, I think tenants are feeling the impact of investors selling out of the housing market. I think we're still going to see that. We're still going to see investors selling off because I think we saw another rate hike from the RBA. The cost of debt is going to remain higher for longer than it was initially anticipated. I think going back to your original question, is there any, light at the end of...
relief in sight, yeah.
Yeah. I think that we are starting to see a slowdown in rental growth. And I think that's occurring because we're probably seeing house shares form. We're seeing actually in our bigger capital cities, the number of people per dwelling is now starting to increase. It's still below what it was pre-pandemic, but it is rising. We're likely to see rents continue to rise, but I don't think we're going to see them rise at the paces that we were seeing. And that is because of that stretched affordability. And what you get in the rental market is a tenant can't afford the rent. It means that they go to a house share or they go to a more affordable property type, they go to a unit or they go elsewhere. They start to look a broader afield to a more affordable suburb. You get that ripple effect occurring within the rental market.
Anecdotally, I had a few friends recently who were trying to find new house shares because it was quite expensive to be living on their own, and they were going to house share inspections. And so there was 20 or 30 other people inspecting this bedroom as part of a house that 2 or 3 other people were living in. And it was quite a competitive market too in that market itself.
Yeah, I can absolutely imagine that. And I think some of the other, the social aspects that occur when you've got tight rental markets too, we've got to consider the number of people that are actually underhoused. So what that means is they're not living in a home that suits their needs. It might mean they don't have enough bedrooms for the children that they have. It might mean that they're, not living in suitable housing. And that is something that we have across Australia. And some of the other impacts is... I've spoken to many tenants about this actually, is rental anxiety. And what I mean by rental anxiety is you're currently in a rental, but maybe your shower is leaking or the tap starts to leak, but you're scared to actually raise that with your property manager because you don't want to give them a reason for them to not renew your lease when it comes up for renewal, or give them any kind of case to not renew that lease or increase their rent next time. And that is also an issue. You need to be able to raising problems that within your rental to get it to a standard. All rentals should be at a certain standard. So, I think that rental anxiety, which I have spoken to a number of people, is actually something that is occurring across Australia, into regional Australia as well as our capitals.
I think it's a really important point to talk about because tenants do have a lot of rights, but it's those sort of underlying things where, well, your landlord could increase your rent, and so you don't want to bring them up that are happening that aren't necessarily being reported about.
Yeah, absolutely. And I think we haven't really dived into the landlord either. I do think that there is an element sometimes. I do think the landlord is almost demonised, and that is not correct because you have to consider that in Australia, most of the rental properties are actually provided by mum and dad investors. I'm not talking about somebody who owns 20 properties. They may own one or two. So we really need to view them as small business owners, and I think we need to also consider that they're also the strain that's also on some of these investors. If you're a mum and dad investor and you have one rental property and all of a sudden your payments on that investment property from a mortgage perspective have gone through the roof, you can understand why part of that needs to go into higher rents. Now, higher interest rates don't necessarily mean that rents are going to rise. It's overall market dynamics that create that. And the market dynamics of the moment is we don't have enough rentals, full stop. And that's what's causing rents to rise. But there is also this other side where we've seen the higher cost of debt, and you can understand why some landlords are having to sell off, which is also that negative feed into the rental market.
Yeah, I don't know if you've noticed it before this year, but this year seems to be the first year where there seems to be a really negative sentiment against anyone who owns a rental property that's not their primary residence.
Yeah, well, in the context of whether it's left empty and they use it as a holiday home, or in the context that they're actually
that you shouldn't
out.
have more than one property.
Yeah, and look, this is the interesting dynamic in Australia, is that we do see property as that vehicle to building generational wealth. And, you know, there is this divide between the haves and have-nots. You know, it is certainly something that is across Australia. But I think we go back to that original point that we were just discussing, is that most rental properties are owned by mum and dad investors. And, you know, they are a key player in our rental market. And actually what we need to do is encourage investment activity. We need to encourage investors back to the market. And, you know, that is challenging in the face of what we've seen in terms of the cash rate moving so much higher over the last 18 months. But we need more rental supply, or we need to think differently about what is the type of rental supply. So things like build to rent, which is very much in its infancy in Australia. It's a very successful model in the US and in the UK, and has been established for many, many years in both of those countries. Now, I'm not saying that that is the solution for the rental crisis that we have across Australia, but it can be part of the solution. And this is where you have institutional investment, and you've got big high-rise developments that are built to rent. So they are, you know, it does what it says on the tin. And Melbourne's leading the way in this. There are a few already across Australia, but it's such a low proportion, particularly when you compare it to the UK and the US. Yeah,
it's interesting thinking about all the different possible parts of the solution, because it's not something that can be solved overnight or with one single answer. So I guess looking at something a little bit lighter, are there, in the data that you've looked at, is there any places in Australia where it is actually easier to find a rental right now and maybe a bit more affordable?
Look, there are. And even at that capital city level, you've got a little bit of diversity across the different cities. There are some cities that have currently record low vacancy rates. So that is Sydney and Perth are sitting at a record low. Other cities are very, very tight, but are kind of moved away from their record low. The one city I would call out would be Canberra. So Canberra is actually the city that is edging towards a more balanced market. So it actually has a vacancy rate of 1.6%. So it's getting close to that 2%, you know, benchmark that we were talking about at the very beginning. And you're seeing that come out in Canberra. Rents have pulled back a little bit. And you know, we've got that vacancy rate. This time last year it was at 1%, and it's now sitting at 1.6. What I would say for anybody, you know, trying in a very tight rental market in a tight city, it does depend on your location. So Melbourne City, so Melbourne CBD, has a vacancy rate of 2.9%. So that's actually much more balanced than some of the other areas. If you're looking towards Sydney, so Rouse Hill has got a vacancy rate of 1.9, so is edging again towards that 2%. So what I would be doing is we do a vacancy rate report, which is published on Domain every single month. And we do that from a city down to a smaller geographic location. And what that does, it allows you to pick out some of those areas that have a higher vacancy rate compared to others. You know, when you look at Adelaide, we were talking about Adelaide earlier, you know, that has a vacancy rate as a citywide 0.3%. But the CBD, it's still very, very tight, but the CBD is 0.6. So conditions there are much better than some of the other areas like West Torrens that has a vacancy rate of 0.2%. So what it showcases is there is still diversity amongst the different suburbs. And particularly when you look at Melbourne City, 2.9, it shows that you've got much better chances of finding somewhere. I think the next equation then kind of goes, well, do I find somewhere within my budget also?
And is that because I know in Melbourne CBD there's a lot of high rises and very smaller apartments there? Is that probably part of it?
Yeah, well, Melbourne CBD is obviously the biggest proportion of rentals anywhere in Greater Melbourne area. So there is a lot more choice. And also Melbourne City did see the impacts more so during the pandemic, where we saw that vacancy rate in Melbourne CBD absolutely soar, and it was just a wash with rental supply. So we've obviously seen it shrink significantly. And I think there's probably some of those dynamics still going on. And I think it's going to be interesting. So we get this peak changeover period as well within the rental market. And that is coming up. It occurs towards the end of the year. You start to see supply rise, rental supply rise. That's seasonal, because we see that it's the biggest changeover period is January time. New leases are signed and you get that changeover. So it's going to be a really interesting period to watch to see what happens with vacancy rates. I do think it's going to be challenging, and probably one of the more challenging changeover periods that we've ever seen. But what you will find is supply will rise, and it will be higher than what we have seen in previous months, if that makes sense. But that is the seasonal impact that we tend to see.
Yeah, and that's a really good strategy as well. If you're finding it difficult to find a rental where you are living currently, maybe using a tool like that domain report and finding those pockets that might be worth focusing more of your attention on, so you have an easier time finding something, maybe less people to compete with.
Absolutely. And I do think, I hate the word compromise, but we all make compromises in life, and all of our choices that we do. I won't have that coffee this morning, that type of thing. I think that big picture, when you're buying your first home or you're looking for a rental, I think particularly under these circumstances, what are my must-haves and what are the things I'm willing to compromise on? So it might be, I want 2 bedrooms. I would like 3, but I actually just need 2. So, and I think that's where that, I would be really kind of clear on what am I actually looking for and what am I willing to not have, but would be on the highly desirable list. And I think as well, if you're a tenant out there and you're looking for a new lease, research. I'm a researcher, but I really highly encourage everybody to do their research. If your landlord has come back or your property manager has come back and gone, rents are going to go up by this when you're signing a new lease, go out and arm yourself with information. Information and data is power, because you need to make sure that what is being presented to you is an accurate reflection of what's happening in your area. So I would be looking at properties that are very similar in that location and seeing if what they're coming to you with is accurate for those dynamics that have gone on. Also, don't underestimate the power of a tenant. If you are a tenant that pays their rent on time and you're a tenant that looks after the investment property, that home, that is well considered from a landlord's perspective. So don't underestimate that as a negotiation power too, or some of the other things is perhaps consider signing a 2-year lease or a longer lease. This is very typical practice in European countries where they have longer term leases. And I actually think it's a model we need to adopt in Australia, because more of us are renting and we're renting for longer. Some people want to be able to make their rental property their home. And to do that, 12 months is over so quick. You want a longer term lease, 3 to 5 years in some of these European countries are, that's the type of lease that is offered. And I think that we can learn a lot from countries that operate those types of systems.
Yeah. Do you have any other strategies for renters right now trying to manage finding places or navigating the landlord relationship?
Yeah, look, I definitely, information is key. Research is number one. I think, say, if you're fresh you're not renewing your lease and you're actually looking for somewhere new, I think you need to be ready. Particularly, we're about to go into the changeover period. So what that means is there might be higher supply, but there is going to be a lot more tenants looking for somewhere to live. So what you need to do is just be ready. Be ready to pay the deposit, apply online if you can, because that actually speeds up the process as well for a property manager. So anything where you can streamline a process, and once it is offered to you, make sure you secure it with the right paperwork and the deposit when you're actually asked, because if you don't move quickly, that's when you risk actually losing being offered that particular property.
Yeah, there's a a lot to think about. I've been out of the rental market for a year and a bit, so I haven't had to worry about all of this, but I know from friends and family it's quite a challenging experience right now. And one friend did have some success when her landlord tried to put up the rent by quite a lot by just writing a very detailed list of everything that was wrong with the property, and apparently they didn't hear back and the rent didn't go up, and that was a few months ago. So maybe that's an approach you can take.
Look, what a great example. I think it's, and this is where it's that information piece. Information is key, and I think it is challenging. And I read in the newspapers a lot around, stories around families that have young children and they're being kicked out of their rental again. And you've got to think that if you are a family that's renting, you're connected to a school. You're in a school catchment zone. You can't keep changing where your child goes to school every 12 months. So these are where I'm actually a very big advocate of longer term leases. Yeah. If we are purchasing our first homes later in life, and for some people, they will be lifelong renters. Maybe that's choice. Maybe that's the financial impacts of just not being able to afford to purchase. I do think that we really need to make that consideration about longer term leases here.
Yeah, and I think longer term leases would make it easier to be a lifelong renter because you could make the place your home and feel a bit more certainty, whereas there's a lot of anxiety if you don't know if you're going to get kicked out of your rental after 12 months or have the rent increase so much it's just not affordable for you.
Absolutely. And then also think about the costs associated with keep moving rental property. It adds up for sure.
Nicola, we've covered a lot in today's conversation. I've certainly learned a thing or two about the dynamics of the rental market in Australia. But if you had to give one tip for listeners who are renting right now, what would that be?
I think I would definitely be sure that I was across the dynamics of the area in which I'm either looking to rent or where I'm currently renting. And that's understanding where that vacancy rate is, because it gives you a lot to really have that deep understanding of the dynamics that are going on. I think as well, say if you're a renter and your North Star is you want to purchase, I would say having that savings journey in place is really key as soon as you can. I know it's very challenging under today's environment, but also consider all of the first home buyer incentives that are out there. Help to Buy should come. So that's that shared equity scheme with the government should come into fruition in 2024. That should help, particularly it's geared towards low to middle income earners. It should help some in the rental market transition to being a homeowner. So what I would be sure to do is actually be across the different incentives. Some of them have an expiry date, and things like Help to Buy will come into play, hopefully, fingers crossed, next year. So that's what I would be, is firstly understand the vacancy rate, and secondly understand those incentives so you've got that pathway to actually buying your home if that's what you are, that North Star is.
Wonderful. Well, Nicola, if people want to learn more about you or access some of the resources that Domain has, where should they head to?
Yeah, head on to domain.com.au.
Wonderful. Well, make sure that's linked in the show notes along with the rental report so people can go and find out a bit more. But thank you so much for coming on the show today.
Thanks for having me, Kay. It's been a pleasure.
Thanks for listening, everyone.